Today, we're going to talk about the anatomy of a 6.69R trade. This trade made over $5,437 on two contracts. And this is the kind of trade that we do regularly with the method that we use to trade. What's great about this trade is you're going to see all these different principles, the laws of I talk about the 10 irrefutable laws of trading success. You're going to see several of the laws at work here and several of our key principles at work inside this trade. So the trade we're going to examine was in the Ultra Bonds, and this is a trade that we initiated last Wednesday. Now, we initiated this trade on an intraday time frame. The way we think about time is very different than how most people think about time. And I'm not going to get into that today, so we're going to keep it just really simple. But this was an intraday trade. So we entered this trade right here. This red box right here represented a support zone that we were looking to go long. And it dipped down in here, and we got long right here. Our stop is this red line right here. We got long at 135.01 with a 134.20 stop. We were risking 13 ticks. And you can see the market goes sideways for a little while, and then it takes off. And then it goes sideways, and then it runs off again into the close. So basically, the intraday time frame trends higher throughout the day. We came into the end of the day, and this is Wednesday, so we were going into Thursday, which was Thanksgiving, which is a holiday. The market was going to be open for a little bit, but trade was going to be really thin, followed by Friday and then into the weekend. So because of the holiday, we elected to hedge this. Now, one of the great things about using options is options allow us to preserve the upside that remains in a trade, and they can also be used to replace a stop. So for example, in this case, we had our stop at 134.20, but then we did not move our stop all day. We would have been willing to let the trade, if it went up in here, turn around, come back and stop us out. We were willing to do that because one of our core premises is that stops kill performance. So we try to mitigate the usage of stops whenever possible. So we got long and intraday time frame. We let the trade work all day long. Now, as we're coming to the end of the day, and we want to start hedging up our risk, the Ultra Bonds do not have a great option market. So instead, what we did is we hedged it with the 30-year Treasury bond, which is the highest correlated contract to Ultra Bonds. 30-year Treasury bond has an excellent option market. So we came in and we sold. You can see it here. This is where we got long this is on a daily chart. Here's where we got long intraday, but this is that same area on a daily chart right here. You can see the market works. And up in here, we hedge our Ultra Bond position by doing the DEES 9th, 126.5 put, 131 call combo, where we bought the 126.5 put, sold the 131 call, and we had to pay 30/64. So bonds taking 30 seconds, but the options actually taking 64. So we paid 30/64 to buy this combo. Now, what this combo did is this guaranteed us, remember, we're long from 125. We're buying a 126.5 put. So this is guaranteeing us that we can sell at 126.5. Now we'd have to pay roughly, if it's 30/64, so if we convert it into 30 seconds, it's 15 30 seconds. So we're gonna have to give up 15 ticks, worst case, if the market sells off. This means that we have a guaranteed exit after the combo at 126.01. So this means that we have about 2.5R profit. 2.5R profit is the worst case scenario for our position from this point forward. And we're selling a 131 call, so we have the ability to rally higher. Now, this is a 131 call in the bonds, but basically this allowed about 6 points of upside in the Ultra Bond. So this was great because this allowed us to potentially make as much as another 10R on this trade. Okay, so we hedge this up. Then we go into Thanksgiving holiday. The market actually goes further in our direction. And then we go into Friday and we get a counter trend move. Now, because of our option structure, we don't worry about this. We're out if there's a problem. So this puts us in a position of strength where we can be really patient in managing our position. So that's what we do. Then when we come into Monday, which was yesterday, we started looking to sell high and exit. Our exit rules kicked in. One of the 10 laws of success is we try and buy low, sell high. Use what we call positive reversion to get in and to get out. So look, when we got in on positive reversion. We got in on a pullback. And how did we get out? We got out with the market pushing towards the highs. So we sold initially the night session right here, and then we sold again over here. We averaged out of our futures at an average price of 137.29. And then we closed our combo. So when we have option positions on, a lot of times there's not good liquidity at night. So what we did is we sold out enough contracts. In this case, we sold one contract to get the risk down. We carried long one contract against two combos. The risk on that was minimal in the short run. We carried that till the morning. When the option liquidity came in, we sold high again right here, and we closed our combo. This got us out of the position. Now, that left us with a profit of $5,437 or 6.69 R. A total profit of 87.30 seconds per contract. So you can see it all coming together. We bought it in an intraday time frame. We rolled it to a daily time frame. We bought it on a pullback with low risk. We rode it the whole day without raising our stop. We hedged it with a structure that eliminated the need for a stop, but allowed us to still have significant upside in the trade. We took it through the holiday. We took it through the weekend. And then when the market started to weaken, we sold high to exit. Now, what's interesting is that if we actually look at what happened today, up in here is where we sold. This is where we got out. You probably see it better over here. Here's the same chart. Up in here is where we sold to get out. And you can see that was an excellent exit because today the market sold off. So that's how you do it. We teach students how to do this regularly. It's not cheap, but it is amazing. Tune in next week when we'll continue to teach you different ways to take your performance to elite level. God bless. Have a great week. Bye.